Hello YouTube, Salivate Metal. As quickly as the metals go down, they can come right back up. You know what they say, what goes down must come back up. And this is not to say that these prices will will keep going up. In fact, they could make a reversal right back down again. And a lot of this is due to some speculative thing. I think a lot of it is psychology. I'm going to explore that for a moment. But I think these little bounces kind of give us a little bit of faith and encouragement that these precious metals certainly do have value. They're just not going to tank down to zero or some ridiculously low number. Like some have speculated. It's been fascinating to see in my past few videos people theorizing and predicting that we're going to see sub $10 silver and gold into the 800s and the like. Then, you know, that could be. It's a possibility. It's easy to make those predictions when we're seeing the precious metals keep continuing to dive down. But in every one of those comments, and I hold firm that I think that overall by the end of 2017, we're going to see the precious metals both go up. Maybe not significantly, but I feel, and again, I could be wrong, and have no problem admitting when I'm wrong, by the way, that I think that we're going to see silver climb up over $20 by the end of the year, and we're going to see gold well above 1300s, probably 1350 is my guess by the end of the year. But it's anybody's guess, really. It's just a guess. It's kind of fun to kind of speculate and study these things and take a look at it. But here, and again, this is an article from KitGo. Take it for what it's worth, but it's talking about what's behind the price. And this is kind of an interesting article here. Gold is expected to find renewed momentum next week as the market has made a key short-term reversal due to shifting interest rate expectations, according to some analysts. Gold is ending a 5-week losing streak, seeing solid gains on the week after bouncing off a 4-month low. August gold last traded at $1227.80, up almost 1.5% from the previous Friday. Silver is also recovering from 5 weeks of continuous selling as it looks to recover key resistance at $16 an ounce. September silver futures last traded at $15.90 an ounce, up 3% from last week. The market has been slowly recovering through most of the week, first reacting to what markets deemed were dovish comments from Federal Reserve Chair Janet Yellen during her 2-day testimony before Congress. She noted that the Fed is paying close attention to inflation and that the central bank could be close to a new low neutral interest rate policy, meaning there could be fewer rate hikes down the road. The precious metals saw another push higher Friday following weaker than expected retail sales and inflation data. Retail sales have disappointed expectations for 5 consecutive months, and inflation has seen solid gains since February. So this could be a turning point, and who knows what it could mean. According to some analysts, the data has created more doubt. Notice they didn't put a space here. In the marketplace that the Fed will be able to hike rates later in the year. The data just continues to be bad, and that will slow the Fed, says Bill Barrich, a senior market analyst at iitrader.com. The Fed could still raise rates one more time this year, but that is already priced into the market. The data means that the Fed will not be any more aggressive than they already have signaled. Philip Strabel, senior market analyst for RJO Futures, said that he expects the disappointing retail sales numbers to have the biggest impact on gold and silver in the near term. I think it's the disappointing retail sales that will eventually take down the equity markets and get the party started for gold, he said. It's possible that these reports force the Fed to the sidelines. Strabel added that he would like to see gold end the week above $12.30 an ounce and silver end above $16 an ounce to signal further gains in the near term. And it looks like we have that. Let's go back to the chart here. Almost for gold, and it is over 16, at least for the ask price, not the bid. So if you're going by bid price, which I think probably the most conservative estimates would probably trigger that it would be the bid price, then considering all things considered with the different sources that we talked about in a prior video, we may see the metals go back down next week a little bit, or at least flirt with going back down again. So what happened to those rate hikes? Market expectations for December rate hike have fallen as the week ends, but still remains above a key threshold. CME 30-day Fed fund futures are pricing in a 54% chance of a rate hike. Last week, markets were pricing in a nearly 60% chance. Traditionally, the Federal Reserve doesn't raise interest rates if expectations are below 50%. Expectations for December rate hike are helping to keep bond yields off their recent lows, which Chris Vecchio, senior currency strategist at Daily FX, said will make it difficult for gold to rally. While the U.S. dollar has fallen following the data, yields are still holding up. In this environment, I think it makes more sense to sell the rallies on gold. Vecchio said that he would have to see prices push above 1240 now before he turns bullish on the precious metal again. And that's honest assessment, Dale. Birch said that he remains constructive on gold as the market has made a key reversal this week. Holding support above $1,200 an ounce, however, he added that investors should be careful about chasing the market at these levels. We are kind of in no man's land right now and face key resistance between $12.37 and $12.60 an ounce. So how to play gold in the near term? Birch said that they are recommending gold investors look at buying September 1260 calls. 1260 is key, and I think that we can get above that if we have a shot at rallying back towards 1290 an ounce, he said. We like September calls because they expire at the end of August and aren't too expensive. And I don't know if that's paper gold or what they're really talking about there. I'm in the physical. I'm at whatever the price is today based off of that price. And so going back down and kind of moving ahead here, the final say, while markets are expected to continue to digest disappointing retail sales and inflation data, there will be plenty of new economic data to focus on next week. So it could just move back in the other direction. And really, the point of this video is to give you a little bit for people that have been bummed out about these low prices. You know, it's the ebb and flow. And many have said, and I'm in the camp of those that said, no matter what the price is, hey, I'm just going to acquire what I can afford when I can afford it. And really, the price drop doesn't matter a whole lot to me. It's just kind of fascinating to kind of keep up with. And if they do go below a certain point, well, if I can find extra funds to scrounge around to get, then I'll take advantage of it. I've not been able to during these last few dips, unfortunately. I've had other expenses come up. But you know, hey, when they go up, that means the silver and gold that I do have, well, they're going to go up in price too. And they're going to at least come to more realistic value. So we shall see how it all plays out. Post your thoughts below. I'd like to extend the multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.